Hello. How y'all doing? Good afternoon, and hope you've declared your independence. Remember, the holiday, the Independence Day, is also for you, not just for the country. So today I wanted to do a video. Why is that? Because I met with someone that has been listening to that guy that I put his name on the board. As you can see that, right? You saw his name, right? Yes, there's a reason for that. So I want you to share and like this video, because I'm about to change somebody's thought process that they've been going through, because there's so many people that are listening to this gentleman. And again, I understand there's a lot of stuff that he might say that's true, but there's something in particular that he is not very clear about, and I want to help you understand it. And that's when it comes to insurance. He doesn't know anything about cash value life insurance, so I want to address that heads on, because it's about time folks stop listening to him when he talks about that. So again, share and like this video. It's gonna be a powerful session, and I want you to benefit from it. So I'm excited. I have some things, just 3 things I'm going to show you today that's going to blow your mind, and you will see, and I'm going to destroy that myth. All right, I'm doing this video just for you. So make sure you share, like, invite your friends to check this out, because this is where you and your family members are going to now see how important this is. See, a lot of times people have said, man, I don't understand insurance. So I'm going to help you understand it today. Right now, I'm going to share some secrets that blow your mind. I put up a post earlier about, where I stockpile my money. And I'm going to tell you why you do that. Why you need to be stockpiling your money in a life insurance product and using it to invest in other things. Not in a savings account, because where you're getting 0.1% interest rate. So I want to do this right now and help you understand it. So let's get some folks in here. I hope you guys are having a great week so far. I'm excited about this week and life. So let me see here. I'm sharing the video, and I'm watching on my on this computers as well, just to kind of get everything together. So let me go ahead and jump on this situation. So I put on there, right, why you should not be listening to Dave Ramsey. Some of you don't know him, but he's on YouTube, he's on TV, telling people why, you need to buy term, invest, the difference in cash value, in investments, mutual funds, or whatever the case might be. But he pushes term a lot. And I met with a young lady that listened to him, and she told me, man, I didn't know that you could do all this with life insurance, and I could have built so much money if I had put my money in life insurance. And I understand it. So let's go to the first slide I want to pull up. So today I have my computer and I put some stuff up. Hey Tay, what's up, brother? How you doing? Tamer, how are you? Man, I hear you killing it over there in New Orleans. Hey Danita Ward, how you all doing? So yeah, people say hello to me. I love it. I love it. So the first thing I want to show you here is this. This is a cash value life insurance. This is a index universal life. Again, it doesn't matter. And I want to give you a disclaimer before I even talk about this, because it's so important that you understand this. See, a lot of people don't understand life insurance, and some insurance agents, unfortunately, are not getting enough training to understand how to use life insurance properly. So the example I'm sharing with you, hey brother, how are you, Tay? The example I'm trying to share with you right now is the way you design it properly. And when you sit down with an insurance agent or whoever it is, here's my disclaimer, to make sure you're working. Make sure you work with the right financial advisor that understands cash value life insurance. Just because they might call themselves a CFP or whatever it is, understand some of them do not understand cash value life insurance. And I'm very serious about when I say that, because I've met with so many that do not understand this, and they push term, and they push you into the mutual fund market, and they also push you into the 401k market. Now understand this, folks, there's nothing wrong with those situations, but the only problem is You need to protect your family. You got to have a financial foundation first. The financial foundation is life insurance. Why do I say that? Because life insurance is the only vehicle that's going to do the thing that you want done for your family. Think about it. Like this example I have here. I just did it on a 40-year-old guy that's putting away $1,000 a month. Now, you're going to say $1,000 a month, that's a lot of money. Listen, there's no reason why you should be saving money, especially for your financial future, and you're paying the federal government in taxes. For example, if you are I'll just use a $60,000 a year income person, you're paying at least minimum, just say 25% tax bracket. That's how much of your money is going to the federal government. You need to be saving 25% of your income before you pay 25% to the government. If you're going to give them 25%, you need to be saving 25% and live off of the rest. Take the rest of your money. If you can't, guess what? Go find a part-time job to make up the difference. That's very, very important. But I'm just going to step back and continue with this $1,000 a month. So I'm using $1,000 a month just to keep the math simple. That's still less than a maximum on the 401k plan. You know, it's a lot higher than the IRA account, but I'm putting $1,000 in there. He's 40 years old. The coverage right away, you see it, is about $460,000 right there. Now, understand this. He puts in the money. One of the myths and the lies that they've been telling us about life insurance, greeting Nielsen, is that life insurance, you cannot get money in the first year. That's the big lie. You can get money. As you can see, you see the word we say surrender value. So let me help you understand the difference between a surrender value and accumulative value. That's something that most insurance agents don't even know till today. And they'll come in and they'll want to kill your policy. So this is what happens. The accumulative value is your money. That's your money. Remember that. Accumulated. That's how much I accumulated. That's your money. Surrender value is the insurance company's money. That's their money. So basically what they're saying, and you can see based on this design, in year one, right, this money, this client can access $10,000 of what they put in. Now, they put in 12 grand. You might say, well, he put in 12,000. It's not dollar for dollar like you put in a bank account. It's not dollar for dollar. Remember, this is a life insurance contract first. You're protecting your family. If you die that first year and you only put in 12 grand, your family is getting a tax-free check for $462,000 right away. Where in the world are you going to invest 12 grand and your family receive $462,000 tax-free? Nowhere in America, nowhere in the world, except in life insurance. But let's forget that for a minute. The insurance company has to pay for the death benefit. They got to pay for their office. They got to pay the agent's commission. They got to pay the people answering the phone, the receptionist. So yes, there's a charge, and some of the money goes to pay for those things. But guess what? The rest of the money is your money because it's been max funded. So let's continue. So you see the 10 grand is growing right there. You have access. If you decide to cancel the plan in the first year, you get $10,000. But why would you want to do that? I don't understand why people do that. You don't have to cancel your plan the first year. Now, of course, not every policy can be designed this way. The agent has to be trained properly to be able to design the policies this way. That's how I train my sales force. A lot of my team in our company, they understand insurance. I take my time to teach them. So today, I'm giving you my secret. I know some of you are out here. I'm teaching you the secret sauce of what we do at American Classic as a company. We teach our agents to be equipped in selling this product. So let's go ahead. Hey, Don, how are you, brother? But check this out. So the policy continues to grow. You see the cash, it's crazy cash. Let me go to the second slide. So what I've done here, I said, so the green, like I was telling you, that's your money. That's why I painted in green. If you notice, if you pass away in year 11, your family gets a check for $607,000. So what did I just do there? I'm showing you how the death benefit increases. This is what they call option B in a universal life policy, IUL. Option B, increasing death benefit. We could also do the same thing in a whole life policy. There's a way we design a whole life for it to do the same thing. See, you got to be schooled. See, the policies that we offer, and we are brokers. So understand, we're brokers. And what does that mean? We could represent a lot of companies, but we don't want to represent a lot of companies. That's too much for, I mean, I have a little head. I can't know everything out there. So we handpick the companies that we do business with. We only only work with 4 companies. That's it. And we design products that are specific and have the benefits that make sense, because I'm a consumer just like you. That's what I do. I own insurance policy just like you're gonna own insurance. They don't give me a discount because I'm an insurance agent. They sell me the same thing. If I have health issues, guess what? That's why I take care of myself. If I have health issues, I wouldn't get any coverage. They'll decline me coverage. The same thing. So I'm a consumer just like you. So my point is, we want the insurance company that we're gonna represent, we wanna make sure that they have the right thing for our clients. Some of our products that we offer, you could get money in 30 days. Let me say it again. In 30 days, you're going to treat it like a savings account. That's what we're talking about. Why am I going after savings account? Man, come on, think about it, folks. Every time I ask somebody, what interest rate are you earning in your savings account? They don't know. They're like, I don't know what interest rate I'm earning. I'm like, why? Because you're upset about it. That's why you don't remember. If you're earning 7%, you know about it, right? But because you're earning 0.01% and you go on your own voluntarily and you give these banks your money and they turn around loan it to you on a credit card and charge you 23%. Your own money. I give you, man, let's try that game for a second. Give me $5,000, right? And I'll give you back $5,000 at an 18% interest rate. Who's going to go broke first? You are. That's why so many Americans are in so much debt. We've been pushed to continue to put money in savings account and do all this stuff. See, the reason I'm going after that guy named Dave Ramsey, because he talks about cash. Cash is king. No, cash is not king if you spend it. Cash is king if you make it work for you and make money for you. That's when cash is king, not when you spend it. Cash is not king if it's spent and gone. I'm from Africa. We don't have a credit system in Africa. Guess what we do? We pay cash for everything. Everything people pay cash. Until I came into this country and I started studying the wealthy families and I realized what is going on. These wealthy families, they use other people's money all the time. Why are everybody else using their own money? I need to find out what are they doing differently. So I'm going to show you what I mean by that. I'm going to go to the next slide real quick. So let's check this out. So here's a loan. Now you built up in year 5 right there. So we start from year 4. This guy built up $44,000, right, in cash. He needs to do some type of investment for whatever it is. I don't know, buy a car, make a down payment on a house he found down the road that he wants an investment property. He calls his insurance company and say, hey, listen, I need $40,000. And they say, sure, we'll give it to you. We'll give you our money. See, that's another misconception. A lot of people think, oh, why should I borrow money from my life insurance company? It's my money. No, 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 no. You're not borrowing your money. You're taking the insurance company money. They're giving you their money with no credit check. They don't report you to Experian, TransUnion, or Equifax. None of those people know you're taking that money. It's a private loan between you and the insurance company. And guess what? It's a stress-free loan. You don't have no stress because there's no bill collector calling you. You take the loan for $40,000 in the eyes of the insurance company, or it's an annual income, we call it. But the eyes of the federal government, it's a loan. Think about it, folks. Your credit card that you have, your car note that you have, when you took that loan from the bank, did you pay taxes on that money? This is just common sense situation. Answer me that question. Type it on the thing right there. Let me know your answer. Did you pay taxes when you took a loan from the bank to buy your house? You only paid property tax, but you didn't pay taxes on the loan. That $300,000 cash that you got from the bank to buy that property that you bought, did you pay taxes on it? No, you did not. You paid property tax on the house. So the IRS does not tax you on a loan. It's so simple. I mean, it blows my mind that so many people don't understand this. But it's okay because I'm here to help you understand it. So when you take a loan from the insurance company, the insurance company gives you their money. So if you notice on the surrender value, the one I was talking about, they give you their money. In this case here, let's look at the, I drew some line there. So in the green, the first green, actually let me go back here for a minute. Right here where it says, and you might not be able to see it, let me bring my green back up. Because I'm working with a computer, so that's kind of all over the place in here. So the first green that you see there, that's the surrender value. That's the insurance company's money. And you took a loan for $40,000 in year 6 from the insurance company. If you notice, your $44,000 dropped to $14,000 in the first green. That's the insurance company giving you their $40,000. But look at your accumulated value. Your money is still growing like you didn't even touch it. That's what I mean when I say you're using your money as a collateral to loan money from the insurance company. They say, hey, we'll give you our money against your money. I mean, think about the last time you went to a bank. You have money sitting in there and you want to get a loan for a car. And guess what the bank tells you? They run your credit and they come back and they tell you no. How did that make you feel when you did that? It happened to me when I was trying to get a medical clinic. I was trying to open one up. And guess what they did? We went to the bank and they said no. I'm like, man, I have great credit. Why? Well, you're a new business. We're not going to give you any money. So what did I do? I said, well, you know what? Let me go to my life insurance policy. And I took cash out and I started the clinic. That's what I did with my money. Guess who else has done that? Disney World has done that. Walt Disney. McDonald's done it. JCPenney done it. Again, this is nothing new. It's been around forever. Unfortunately, a lot of people don't take the time. Insurance agents, and I'm talking to them right now, they don't take the time to learn this stuff. They just jump in. So I want to help them understand it. You know, a lot of them don't work with me, but I'm going to educate them on how it works so they know. And because we need more soldiers out here singing the song to a lot of consumers, because we need to change the way America is thinking. Because if we could get America out of debt, guess what? Everybody will be so happy. Stop focusing on all this other stuff that doesn't help your family. Now, the second line right there, the third green is the $40,000 that you took out and the loan. Yes, there is a loan. The insurance company is going to charge you interest rate. Somebody will say, why should I pay interest? Well, you pay interest to the bank, don't you? Why are you tripping? The banks give you their money and they charge you 18% and pay you 0.1% interest rate. Here in this type of product that we're talking about, which is an index universal life product, the way it works with the S&P 500 based on the market. It says if the market goes up, you're going to get a cap. Some companies have a 12% cap, some companies have 12.5% cap. If the market goes down, negative 25%. You don't lose anything, you don't gain anything. It's okay, there's no problem. Then we have whole life insurance that pays you an interest rate without the risk of the market. It just depends on how you want the plan designed. So at the end of the day, understanding the plan makes sense. And what you want to do when you're talking to a financial advisor, the first thing, especially one that's trying to offer you a life insurance policy, you need to make sure the plan is designed properly to benefit you. Not to benefit the agent, has to benefit you. If it makes sense for you and you understand it, guess what? You need to be able to take advantage of it and use it like your bank. But if it doesn't make sense and you don't see and the numbers don't act right, guess what? Hey, we're still here. We could do business all over the country. We're licensed in a lot of states. We have agents all over. Give ours a call and we could work with you on that. Now, check this out. The last thing here, as we talk about this to kind of close out, a lot of times we sit down and we look at things and we miss out on opportunities that is presented to us. So I wanted to help you understand this. I hope it makes sense to you. If you have any question, hey, reach back out, send us an email, send us an inbox message. We'll be able to help you with the question. So I hope this helps you on a Saturday afternoon. I know you guys are out there enjoying yourself, and I'm just coming up and showing you this video. But listen, thank you for your time. Let's go out there and take care of our families, because they're depending on us to make the right decision. our future family, our future person is depending on us to create that generational wealth. You need to be able to do that for them. There's no excuses anymore. There shouldn't be any for you. Have a good day. Bye-bye.